Hey there, friends! Today, we're diving into a topic that's often tossed around in the investing world, but can sometimes feel a bit like trying to decipher a secret code. I'm talking about diversification. Now, before you roll your eyes and think, oh no, not another boring finance lesson, hang tight. I promise to keep it engaging, relatable, and most importantly, informative. So, grab your favorite snack, get comfy, and let's break down why diversification is like adding a little spice to your investing stew. Picture this. You're at a party, and there's a buffet laid out. You see a mountain of mashed potatoes, a platter of chicken, and an array of colorful veggies. Now, you could just fill your plate with mashed potatoes, but let's be real. How long would that keep you satisfied? Probably not long. You'd miss out on the deliciousness of the chicken and the crunch of the veggies. Investing works in a similar way. Diversification is about spreading your investments across different assets, just like you'd fill your plate with a variety of foods. So, why is this important? Well, let's get into the nitty-gritty. Imagine you've invested all your money in one single stock. Let's say a trendy tech company that everyone's raving about. You're feeling pretty good about it, right? But then, out of nowhere, the company faces some unexpected challenges. Maybe they had a major product recall, or a competitor launched a game-changing gadget. Suddenly, your investment takes a nosedive, and you're left wondering what went wrong. If only you had spread your investments around. That's the beauty of diversification. By investing in different sectors, like technology, healthcare, real estate, and even some international stocks, you're not putting all your eggs in one basket. It's like having a safety net. If one investment doesn't perform well, others might pick up the slack. This can help cushion the blow during those inevitable market dips. Now, let's talk numbers for a second. Studies have shown that diversified portfolios tend to perform better over the long haul compared to those that are heavily concentrated in a single investment. This isn't just a theory, it's backed by data. Historically, the stock market has its ups and downs, but a diversified portfolio can help smooth out those bumps. You're essentially lowering your risk while still giving yourself a chance to grow your wealth. But wait, before you start thinking that diversification means you need to invest in every single stock out there, let's clear that up. It's not about having a million different investments. It's about finding a balance. Think of it like a well-rounded diet. You don't need to eat every food group every single day, but you want to make sure you're getting a variety of nutrients over time. A good rule of thumb is to consider different asset classes, stocks, bonds, real estate, and even some alternative investments like commodities or cryptocurrencies. Each of these has its own risk profile and can react differently to market conditions. For instance, when stocks are soaring, bonds might be lagging. But when the market takes a dip, bonds often hold their ground. By mixing these assets, you create a portfolio that can weather various economic climates. Now, let's take this a step further and talk about geographical diversification. Have you ever thought about investing in international markets? It might sound intimidating, but it's actually a fantastic way to spread your risk. Markets in different countries can behave differently based on their economic conditions, political stability, and even cultural trends. So, while the U.S. market might be facing a downturn, maybe the European or Asian markets are thriving. By adding a sprinkle of international investments, you can tap into growth opportunities that you might otherwise miss out on. And here's another fun fact. Diversification isn't just for seasoned investors. It's equally important for beginners. If you're just starting out, you might be tempted to go all in on that one stock you've heard about from your friend. But remember, even the best companies can face challenges. By diversifying from the get-go, you set yourself up for a more stable investing journey. Plus, it can help you build confidence. As you see your portfolio grow and adapt, you'll feel more empowered to make informed decisions about your investments. Now, I know what you might be thinking. This all sounds great, but how do I actually start diversifying? Well, let's break it down into manageable steps. First, take a good look at your current investments. What sectors are you already in? Are there gaps you can fill? Next, consider your risk tolerance. Are you someone who can handle the highs and lows of the stock market, or do you prefer a more stable approach? This will help guide your decisions. Another great option for beginners is to look into exchange-traded funds, ETFs, or mutual funds. These are like pre-packaged baskets of stocks or bonds that offer instant diversification. Instead of picking individual stocks, you can invest in a fund that holds a variety of companies, giving you exposure to a broader market without the hassle of managing each investment separately. Lastly, don't forget to revisit your portfolio regularly. Life changes, and so do market conditions. What worked well for you last year might need a little tweaking this year. By staying engaged and adjusting your investments as needed, you'll keep your portfolio aligned with your goals. So, there you have it. Diversification is all about creating a balanced and resilient investment strategy. It's your safety net, your buffet plate, and your ticket to navigating the unpredictable world of investing. Remember, it's not just about chasing the next hot stock. It's about building a foundation for long-term growth and financial security. As you embark on your investment journey, keep diversification in mind. It's not just a buzzword, it's a powerful tool that can help you achieve your financial goals. So go ahead, spice up that investment stew, and watch your portfolio flourish. Thanks for tuning in, and happy investing.